Larry Fink, thank you for joining us. I should say in Larry's defense that firstly, he had no idea that he was going to be so wildly applauded.
Yeah,
by the previous
can we end it now?
And secondly, that this is water in his flask, not something more potent. I thought we would begin with climate change. In the 2020 edition of your CEO letter, it's now become a sort of biggish thing in the industry, you said we're on the edge of a fundamental reshaping of finance caused by climate change. And you basically said that it's going to upend finance much quicker than we thought. And then you talked about the different ways in which sustainability and green portfolios you thought would be less risky for investors. But can you perhaps say, what changed? Why did your thinking advance on this so much? You've obviously taken some stick from climate activists.
Well, John, thank you for having me, and thanks, Bloomberg. Hello, everyone. So it's a long path for me, but really it was post-summer, and I start my letter fly fishing in Alaska generally, but this year it was a confluence of many different inputs that I had from our clients. Clients worldwide have been asking me repeatedly more and more and more about how should they frame a portfolio with climate change considerations. And it was very clear to me that this is becoming a dominant theme with more and more of our investors. And I wasn't prepared to answer many of those questions at that moment. And it was very clear to me that I needed to focus on it. I needed to get BlackRock to focus on it. And from the period of time, really from September 1st through the end of the year, we spent a great deal of time focusing on it. I spent a great deal of time talking to insurance company CEOs. I talked to the CEOs of the housing companies of America, and I talked to some different mayors. And I had conversations worldwide related to the impact. And it was very clear to me, whether it's 10% more of our clients or 20% of our clients, it was very clear to me that more and more clients are now thinking about how should they invest. And it was very clear to me the whole issue of climate change is really related to the whether it's certainties of science or the uncertainties of science. And I'm not a scientist, but more and more people are believing in some form of the science, if not all the science. And by being in the capital markets now for 44 years, it's very clear we in the capital markets, we bring risks forward. We don't wait until the risk is in front of us. There are times that happens, and that was a great financial crisis. But in most cases, we navigate the risk, and through that process, we mitigate most risks. And so the process of having more and more clients focusing on these issues was very clear to me that there's a greater belief of the science, and as a result of that now, we should not avoid the conversation about climate change, because climate change is now becoming an investment risk. And no differently as investors focus on yield curve or whatever forms of risk we have, it was very clear to me now we need to now bring forward better risk tools to navigate risk. And this is a component of the letter was asking more companies to be more self-reporting on things like SASB and TCFD. So we have better clarity and understanding how each company is navigating these issues. And I'm not here to tell you these are the best tools. What we're suggesting now, there are good tools now, and hopefully we have better tools. And I do believe we're on this long path. And in 2019, most of the sustainable funds outperformed regular funds. Now, you could argue that's a big, giant momentum trade.
You had a lot of inflows, I've seen.
We had record inflows, and we have
particularly into ESG things.
Record inflows in ESG.
Yeah.
And so, a part of the announcement we announced, every one of our products is going to have some form of a sustainable counterpart, and so we could bring this forward and have more investors a part of this dialogue. But I want to just say one really important thing that I did not write about, but I kind of inferred in one of the, in my mind, in one of the central themes or essential paragraphs, and that was climate change is going to be a 50-plus year journey, and we as a society, as humans, we're going to use carbons for a long time. Right now, whether it's 18% or whatever around there, only 18% of humans have flown on an airplane. So the need for, we don't have the science yet to create non-carbon oriented big engines. And so we're going to be using carbon for a long, long time. And the key that we need to do is try to find ways of mitigating those risks while we are dependent on carbon recapture. There are many things we need to be doing. But my greatest concern is not that we as investors and we, the capital markets, are not going to find a lot of capital to invest in these projects. My biggest fear is the dependability and the dependency we have on governments. Because I don't see governments are working towards these long-term objectives.
Can we come back to governments in just a second? Just on you and climate change. You know, the activists out there will say it's not so much to do with where you're putting your money, it's the issue where you're not taking your money away. Is that whether big fund managers should be pulling money out of Exxon. You have the example last year of Legal & General, which sold a big chunk of what they said in the name. They were saying that was a green thing to do, to sell Exxon and to vote against the CEO.
And I would disagree.
You own shares in all these.
I would disagree with that.
Why do you disagree?
It's not my money, okay? I'm a fiduciary. If a client gives me a contract to invest in the Standard & Poor's index, I can't legally invest in the S&P 997, or excuse me, 497.
Yeah.
I got to get my math right. 497. But I'm going to create a 497 fund, or I'm going to create a fund that mimics that. I could do other things about that, but I don't agree, and I'm not sure if Legal & General did that in their index funds. They may have done that in their active
It's on the active side.
Okay, they may have done that.
Would you do that on your active side?
No, we're not doing that because at times there's going to be, here's what my greatest fear is, if we all run away from these companies, those companies are going to be trading at lower and lower PEs. Those are some of the energy companies are the biggest investors in sustainable energy. And so, and also we need these companies, especially in America, where we're flaring natural gas. We need these companies to have the resources to recapture their carbon. We can't just abandon it. And the last thing is, let's assume, I mean, this is just a value trade, let's assume there's a 50-year lifespan of hydrocarbons. But if the market prices the hydrocarbons to a 20-year lifetime, you're going to have some big pool of money buying it, and they're going to make the biggest profits ever. And so let's be clear, it's not, we don't want to run away from anything that we did with coal, but what we want to do is be offering choice and giving more and more of our clients the ability to navigate around that and giving them more certainty that they could invest around this, especially, unlike in Europe, in the United States, I'm governed under the rule of ERISA. So for all my ERISA accounts, I have one fiduciary rule, and that is to maximize profits.
So if something like Greta Thunberg was sitting, you know, she is here and she is saying that people should not invest in fossil fuels. This would, you would say you're being naive.
Well, I would say, I will give her the U.S. law.
Yes.
The U.S. law is very different than laws in other places. And let's be clear, living under the rule of ERISA, if you go against ERISA, it's a criminal offense. It is not a civil offense, it's criminal. I don't think I want that. I don't think you want that. But most importantly, this is how, if society wants to change that, that's a whole different story.
And the other one which people bring up is climate-related resolutions. Will you start voting on more of those in terms of being critical?
So we have lost part of that narrative at BlackRock. There's no question about it. We have the largest corporate stewardship team in the world. We had over 2,000 individual meetings with firms, more than anybody. In many cases, we have had conversations with companies way before a proxy, and we've got them to move in more of a climate specific way. That's not public and transparent. They already did that. Out of all the different climate issues, there was only like 27 different proxies out of the thousands of companies, and everybody cites these things as big, giant things. It's small, but we are changing the narrative. We are going to now announce how we vote every quarter. On the big proxies, we'll announce simultaneously to the vote, so we're going to provide greater transparency. And we are asking all the companies to now, as I said, to publicly tell us how they perform under SASB and TCFD. And if they don't, we may vote against them, depending on, and we're going to give them all 2020, but we're talking about for 2021. So we're going to make some changes, and we may vote against some of the actions if companies are denying some of these issues. But I'm not here. I'm not on that committee, and I'm actually not permitted to know how we're voting.
I interrupted you earlier when you said you were coming on to governments, and I know that a big reason why you pushed the idea of purpose as well as profit was that you thought that governments alone would not be able to achieve the changes, and they needed companies as well. You've also talked rather interesting about the dysfunction of democracy, which seemed to be where you were going with your previous starting point on that.
Did I use the word dysfunction? I don't think I did use that word.
My researchers are obviously wrong, but in terms of how you look at government at the moment, is there any sign since you started this that governments have got better at dealing with these issues that you wanted them to look at?
Yes, some governments are, but most governments have not. I think most governments are so focused on electioneering and 2-year election cycles, 4-year election cycles, that we're not seeing any true long-term planning. And this is one of the fundamental problems I see with climate change. It requires real planning. I mean, climate change is not something that the Federal Reserve and all the central banks are going to be able to fix. So in my 40-odd year of being in this business, we've had 5 very large financial crises. We had central banks who were able to navigate those financial crises, mitigate it. I'm not saying that people were not harmed by that, but we were able to fix, by and large, those crises. Climate change is not going to be fixed by a central bank. And it's going to be fixed by a combination of public and private. And it's going to require a great dialogue on moving this forward.
Surely it's mostly going to be fixed by governments. It has to be things like carbon taxes or things that actually force you to change your behavior. Not you.
The problem with carbon tax, and I was with President Macron last night, and he talked about it. Carbon tax and other forms of taxation, and let me be clear, climate change is highly, highly regressive. And this is why we need great government policy. I mean, when you think about the impact of climate change, about areas like in Florida, or you're already seeing insurance companies changing how they insure houses around flood zone areas. You're already seeing insurance companies changing their policies in areas of California where you have severe fire risks. Families who have the wherewithal to pay for higher premiums are not going to be displaced, but the cost of housing is going to go up because of this. This is really, really regressive. Carbon tax is another form of regressiveness, and this is why when President Macron had to reverse the carbon tax in France. So there's no question we can fix many of these climate change issues through these policies, but those policies are going to create more fragmentation in society, and that's going to probably create even a slowdown with government policy to mitigate and fix this. So it can't just be done by raising a carbon tax tomorrow. If it's going to be done that way, we need to be thinking about it. If in America, if one of the resolutions to making sure our housing finance markets are strong, and as they have always been, we may be requiring every house to have some form of flood and fire above and beyond in zones area. Right now, in most of that cases, it's federal. And in some cases, it's supplanted by state. But in most cases where the states do it, like Florida, it's pay as you go. I mean, there lies the problem. And so should we develop a private market right now for...
To start it.
And so, but the problem is it's going to add to the cost of housing. And think about what that societal impact is. So the problem with solutions, the solutions disrupt. And we have to be thoughtful with the solutions, that we are purposeful about how we solve this, and purposeful that we are trying to we understand the societal impact by this, and we try to find other ways of mitigating it, or other ways of substituting those losses. There has to be some bigger, broader agenda to make this all work.
Just to sort of switch it a bit back on you, on the societal side of it, one thing which is a trend that seems to be developing over the past year and would seem to be happening over the next few years is, just as big tech came in for criticism, you've now got the equivalent of big finance. I looked at you, BlackRock, Vanguard, and State Street. You together control an average of 22% of the S&P. And people are saying, look, this could restrict competition. There are various things coming up. Do you sense that you're coming into the sort of political sights of regulators and people?
I'm not sure that statistic is right. So let me just, I mean, if you said...
An average of 22% of
I would
shares,
say probably average 16 to 18, but it's still a lot. Okay.
The big three, anyway. You are growing a lot as
We're growing a lot, yeah. There should be a conversation about it. There should be a debate. And if society wishes for firms like BlackRock to have less specific control on corporate outcomes, we could do like some other asset managers have done. They've created different legal entities that are separate, distinct, that will vote very separately, and they're very distinct teams. We could do that tomorrow. And that may be one of the outcomes, that we have to create a holding company structure with different true proxy teams voting, with two different legal entities doing that.
But you would presumably argue that's more bureaucracy and more cost for your fund holders.
If there is a societal view that there's too much power rested on these few companies, and we could find a solution to mitigate that risk. I don't believe it's a risk, but I'm willing to have that conversation, and I'm willing to add those bureaucracies and costs if that makes it safer, sounder, and better. But I do believe in the asset management arena, just like in banking and other areas, sectors, we're seeing a huge consolidation. And that consolidation is, if anything, what we saw in 2019, it accelerated. We announced last week that we raised approximately $430 billion of net new assets. And today, other asset managers in the last few days announced that they had outflows the same period of time.
UBS just yesterday, I think. And so it will continue in that track. So you would expect the big three to get bigger.
No, I mean, we raised over $100 billion in active funds last year. I believe that there are few firms that are staying in front of the needs of clients, are working with the clients, are providing better solutions. The asset management industry was so designed around products, and we designed BlackRock around clients' outcomes, client solutions, and more clients worldwide are coming to us for solutions and are looking to have a deeper, broader relationship. The one thing I said in my shareholder call last week, we're building deeper, broader relationships with more clients in the world today than we've ever been before, and we're earning more of their share of wallet. And we're doing something right for them. Either it's lower fees, better advice, better outcomes.
This conference called the Year Ahead. If you look over the past decade, I think you could argue that your firm has been the victor from what has probably been the biggest shift in your industry, which was towards passive. If you had to guess what will be the next big thing, what is it?
So the myth about the movement to passive remains a myth by how you frame the question.
Yeah.
More and more assets are moving into index strategies for active purposes. And that's the biggest change that's going on. Right now, the global bond market is about a $100 trillion market. Right now, ETFs are $1 trillion. I believe in 5 to 10 years, it'll be 5, 10, maybe $20 trillion. I could show every one of our clients why, instead of owning all these individual bonds, you could get the same type of returns by actively managing 4 ETFs, by moving around duration, convexity, all the different components of risk and bonds, and you could do that. So what people are missing in the whole dialogue, ETFs are like a technology. They simplify your life. They make it inexpensive for you to navigate around instead of owning thousands of bonds. And this is one of the big fundamental changes. So in answer your question, John, I believe you're going to see trillions of dollars of money moving into more index-like strategies.
Does that apply even in Asia, where there seems to be a little bit, you've talked about China being a huge growth area. China's one, there seems to be more resistance to ETFs and index, or that's not fair?
Well, I mean, China is going to be a big, a big market for all of us. China has a major issue. It has 40+% savings rates because there's no safety nets of retirement and healthcare. And China needs to address how do they navigate retirement? How do they create a 401k? And so China last year asked BlackRock with the PBOC to host a retirement conference. And I think that's going to be one of the biggest transformations. How does China navigate that retirement market? And if they don't, China is going to underperform, especially as its economy is becoming less dependent on exports and more connected to its domestic economy. It needs to solve this problem. And China is in the midst of opening up the markets. There have been a few announcements already. We announced already with Temasek, a joint venture with China Construction Bank. Let me state it, a memorandum of understanding to get to the contract. But, I think that there's going to be more and more of that.
Just one last thing on that. We talked with Satya Nadella earlier about the world being divided between American and Chinese systems, especially in technology. Do you see that happening at all in finance? I mean, there is now a fundamental, or seems to be a fundamental conflict between those two big countries.
In finance, China needs globalization. They need global input. They don't have a developed capital markets. They need to bring it in. So in the next 10 years, I would say it would be the opposite. China needs the global financiers to help them build up their retirement business and market. And I think there's going to be great long-term opportunities. I think it'll make, look, I'm a big believer. One of the greatest components why the world becomes safer is when the world needs to import capital. So when when capital is imported from other parts of the world to another to a country, they have to live under the world stage, and so China in the next 20 years is going to be a big importer of capital, not an exporter like they were, and I actually believe this is a good outcome as more and more countries are moving through the capital markets of taking capital, releasing capital. That's all good. That's one of the fundamental reasons why I believe the world gets safer and safer. And despite all the noise and all the uncertainty, the world has proven to be a safer place than it was 40, 50 years ago.
That's a very good place to end. I'd like to thank Larry Fink very, very much. I'd like to, please. Also the end of our lunch. You can continue the conversation online by tweeting at Bloomberg Live and by using the hashtag the Year Ahead. Once again, I'd like to thank Willis Towers Watson and IBM. And for those of you based in Europe, we've got 2 events coming up, our Equality event, our Quality Summit, and the Sooner Than You Think in June. And you can go to Bloomberg Live to look at it. Once again, thank you very much, and particularly big thank you to Larry for coming here, and Satya and all the other people. Jen is still here. Thank you very much, and thank you very much for coming. Thank you.